Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news markets are handling the Ukraine crisis calmly, so far at least. As Ukraine braces for open war as Russian forces move deeper into their country, the rest of the world is bracing for the economic impacts, however, which is including aggressive cyber war. Spillover will no doubt affect New Zealand at some point. EU and US sanctions are hitting the value of the ruble. It's now at an all-time low, and the yield on Russian bonds, with the 10-year now approaching 11%. Their 9% inflation rate is expected to rise. Even though current sanctions only formally hit Putin loyalists, that is the oligarchs, they will still have a tough impact on ordinary Russians. And there will be loud echoes in the EU and other global financial markets too. Meanwhile, in the US, retail sales growth continued its strong recent expansion last week, still rising far faster than CPI, so it's still recording real volume gains there. But mortgage applications fell sharply last week, down to their lowest level in more than 2 years as their benchmark 30-year mortgage interest rate continues its slow but relentless push higher. In January, industrial production in Taiwan continued its impressive run-up, up 10% and rising faster than December. Even more impressive is a resurgence in their retail sales in the country, up 6.4% in the month from a year ago, when inflation is rising at 2.8% over the same period. One thing the Ukraine crisis is doing is raising global food prices. Wheat, a major Ukrainian export, is now trading at a 9-year high, up almost 30% in a year. That has big implications for bread prices. And it isn't the only commodity price rising. Palm oil and soybeans are too. And those food prices are worrying China. China's on a self-sufficiency program again. There seems little in this latest push, however, to differentiate it from all the others. In Australia, their wage index was up another 2.3% year on year, but that's not strong enough to make a June rate hike there more certain than not. The US Treasury 10-year yield opens today at 1.98% and up 5 basis points. There was a loud echo in the New Zealand swap rate markets yesterday after the hawkish RBNZ signals, with a 2-year reaching a 6-year high. And the price of gold starts today at $1,910 an ounce and up another $7 from this time yesterday. But oil prices are down 50 cents at just under $91.50 a barrel in the US, while the international Brent price is just over $94 a barrel. But it has been a roller coaster ride for oil in between. And the Kiwi dollar will open today up another quarter cent at 67.8 US cents. Against the Australian dollar, we're up slightly too at 93.6 Australian cents, and against the euro, we're also firmer at 59.9 euro cents. That means our trade weight index starts today at just on 72.2, with another daily gain, and the first time it's been over 72 in 5 weeks. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.